Trading is not just numbers moving on a screen. It is not candles, not entries, not exits. It is not even about money the way you think it is. Trading is a mirror, and every time you sit down in front of that screen, it reflects back to you who you really are. Not who you say you are, not who you pretend to be, not who you hope to become, who you actually are when pressure shows up. You might believe you are calm, patient, disciplined, logical, but then price starts moving and suddenly you feel that tightening in your chest, that subtle urgency, that quiet voice that says this one has to win. That is the mirror speaking. Most traders come into this game chasing certainty. You want to know. You want to feel sure. You want confirmation. You want proof before you risk your money. You scroll through opinions. You look for agreement. You wait for everything to line up perfectly so you can finally say, now it's safe. But the market does not offer safety. It offers probability. And there is a difference. You have felt it before. You take a trade that looks perfect. Everything aligns. You feel confident, almost proud, and then it loses. Not because you were wrong in your analysis, not because the world is against you, but because even the best idea still lives inside uncertainty. When you expect every trade to win, you are not trading probability. You are chasing control. And control is an illusion here. You think if you study harder, refine more, wait longer, filter better, you can eliminate losses. You think there is a version of you that finally cracks the code and never feels that sting again. But the sting is not the problem. Your expectation is every single trade you take is one event inside a larger series. One moment in a long chain of outcomes. Some will win, some will lose. And you do not know which is which before it happens. That truth is uncomfortable because it means you cannot predict the outcome of this specific trade. You can only execute your edge and allow the distribution to unfold over time. Most traders never truly accept that. You say you understand it. You nod when someone explains probability, but deep down when you click that button, you are still hoping this one is special. You are still emotionally tied to this single outcome. And that attachment is what breaks you. When you win, you feel validated. When you lose, you feel attacked. The market did not attack you. It revealed you. It revealed how much you needed that trade to go your way. If trading is a mirror, then chasing certainty is like arguing with your reflection. You are trying to force reality to match your comfort. The shift happens when you stop asking, will this trade win? And start asking, did I execute my edge? That question changes everything because now the focus is not on outcome. It is on behavior, and behavior is within your control. Once that begins to sink in, the emotional storms start to lose their power. Not because you stop caring, but because you understand that caring about the outcome of one trade is like obsessing over one wave in the ocean. The ocean does not move because of one wave. Your equity curve does not grow because of one trade. It grows because of consistent execution across many. And when you truly accept that, you stop trying to be right every time. You start trying to be consistent. But even when you grasp that idea intellectually, there are traps waiting inside your own mind. You have felt fear show up when price moves close to your stop, that sudden urge to close early, to protect yourself, to escape discomfort. You have felt greed when a trade moves in your favor. The thought, maybe I should hold longer. Maybe this one will run forever. You have felt overconfidence after a few wins. That sense that you finally understand it, that you can increase size because you are in sync. And then you have felt denial, the quiet refusal to accept that you were wrong this time, the hope that if you just give it more space, it will come back. All of these are not market problems. They are identity problems. Fear reveals how much you resist uncertainty. Greed reveals how much you crave more than the plan allows. Overconfidence reveals how quickly you attach your worth to short-term success. Denial reveals how deeply you struggle with being wrong. The market does not create these traits. It exposes them. When fear appears, it is not random. It is showing you that you never fully accepted the risk before entering. Somewhere inside, you still believe this trade should work. If you had truly accepted that it could lose before clicking buy or sell, the loss would not shock you. It would simply register as one outcome inside the series. Greed shows up when you do not trust that more opportunities will come. You feel scarcity. You think this move is rare, special, unique, so you stretch beyond your plan. And that stretch is the mirror telling you that you do not fully believe in abundance over time. Overconfidence creeps in when you start believing you are the reason for short-term wins. You forget that randomness still plays a role. You forget that even average decisions can win in the short run. And denial is perhaps the most painful reflection of all, because denial whispers, if I close this, I admit I was wrong. And being wrong feels like an attack on who you are. So you hold, not because it makes sense, but because your ego is protecting itself. The moment you begin to see these reactions as signals rather than enemies, everything changes. Fear becomes a reminder to define risk clearly. Greed becomes a reminder to respect your plan. Overconfidence becomes a reminder to stay humble before probability. Denial becomes a reminder that being wrong is part of the process. Instead of fighting your emotions, you start listening to what they reveal about you. That awareness is the beginning of discipline. Discipline is not forcing yourself to act differently while boiling inside. Discipline is alignment. It is when your beliefs about uncertainty match the reality of trading. You craft your edge not just on the chart, but in your mind. An edge is not magic. It is not perfection. It is simply a repeatable behavior that over time produces positive results. But a repeatable behavior requires structure. You need rules that are written, not floating in your head. Clear conditions for entry, clear conditions for exit, clear limits on how much you risk, not because the market demands it, but because your mind does. When rules are vague, emotions fill the gaps. When risk is undefined, fear grows. When your why is shallow, discipline collapses under pressure. Why are you trading? If the answer is just money, you will struggle, because money magnifies emotion. But if your reason is growth, mastery, freedom, long-term consistency, then each trade becomes practice rather than judgment. Daily routines matter more than you think, not because of superstition, but because routine reduces chaos. When you approach the market the same way each day, reviewing, planning, waiting, executing, reviewing again, you begin to build trust with yourself. And self-trust is everything here. You cannot control price. You cannot control news. You cannot control volatility, but you can control whether you follow your plan. And every time you do, even if the trade loses, you strengthen that internal trust. That trust allows you to accept risk fully, and risk is the foundation of this entire journey. If you are not comfortable losing the amount you risk, you have already lost mentally before the trade begins. Risk is not something you hope to avoid. It is something you define, accept, and make peace with. Before you enter, you must know exactly how much you are willing to lose. Not in vague terms, not emotionally, clearly. Once the trade is live, that risk should not feel like a threat. It should feel like a cost of doing business. When you risk small relative to your capital, something powerful happens. Your mind stays clear. You do not stare at every tick. You do not panic at every fluctuation. You allow the trade space to play out. Position size is not about how fast you can grow. It is about how long you can survive, because survival allows probability to work. When you scale in or out, it should be planned in advance, not reactive, not emotional, but structured. Capital is not your identity. It is a tool. If you treat it as a reflection of your worth, every loss will hurt deeply. If you treat it as fuel for a long-term probability play, losses become manageable. Owning uncertainty means you stop trying to eliminate it. You stop moving stops further away to avoid being wrong. You stop closing early because you fear giving back profit. You stop doubling size to recover faster. You accept that drawdowns will happen, and that acceptance creates calm. From that calm, growth becomes possible because now when you make a mistake, you do not collapse. You review. There is a difference between a losing trade and a mistake. A losing trade that followed your rules is not an error, it is variance. A mistake is when you violated your own plan. If you cannot tell the difference, you will either blame yourself unfairly or avoid responsibility. Both are dangerous. When you review, focus on process. Did you follow your criteria? Did you respect your risk? Did you manage according to plan? If yes, then the loss is simply part of the distribution. If no, then there is something to adjust in behavior. Remove judgment from this process. You are not reviewing to shame yourself. You are reviewing to refine. The market does not punish you. It reveals gaps in alignment. When you begin to see losses as tuition rather than trauma, your relationship with trading transforms. You stop fearing mistakes. You start extracting lessons over time. That mindset builds resilience. Drawdowns still happen. They always will. But instead of spiraling, you remain steady. You understand that a series of losses does not mean your edge disappeared. It may simply be part of the natural rhythm of probability. Equanimity is not emotionlessness. It is balance. It is the ability to experience wins without arrogance and losses without despair. When you operate from that balance, you enter what many call the zone, not a mystical state, but a state of alignment. You see opportunities clearly. You execute without hesitation. You accept outcomes without resistance. Time starts to feel different. You are not rushing. You are not forcing. You are participating. Mental energy becomes precious. You stop overtrading. You stop watching every minor movement. You conserve focus for high quality moments. And over months and years, something subtle happens. You change, not just as a trader. As a person, you become more patient, more self-aware, less reactive, more grounded in reality. Because trading has shown you who you are under pressure. It has revealed your fears, your ego, your impatience, and instead of running from that reflection, you chose to grow. Compounding is not just financial, it is psychological. Each disciplined action builds on the last. Each calm response strengthens the next. Eventually, you no longer need to fight yourself in the market. You and uncertainty coexist peacefully. You understand that randomness is not the enemy, it is the environment. And in that environment, your job is simple: define your edge, manage your risk, execute consistently, review honestly, repeat. Trading will always be a mirror. The question is not whether it reflects you. It will. The question is whether you are willing to look, because when you do, and when you accept what you see without denial, without ego, without fear, you begin to reshape the person staring back at you. And as that person becomes calmer, clearer, more disciplined, more accepting of uncertainty, your trading naturally evolves, not because the market changed, but because you did. And in that quiet transformation, you realize something powerful. The real victory was never just the account balance. It was becoming the kind of person who can operate in uncertainty with confidence, humility, and control over self. That is who you become when you allow trading to refine you instead of define you. And once you reach that point, the mirror no longer feels intimidating. It feels honest and you are finally comfortable with what it shows. When you become comfortable with what the mirror shows, something inside you relaxes. You stop trying to hide from your own reactions. You stop pretending you are unaffected by losses. You stop pretending wins do not inflate you. You stop pretending you are purely logical. You admit that you are human, and that admission is strength, not weakness. Because once you accept that you are human, you can build systems around that truth instead of fighting it. You begin to realize that trading is not about becoming emotionless. It is about becoming aware. You have felt those moments when your heart starts racing before you enter a trade. That subtle rush, that sense of anticipation, that rush is not a signal to act. It is a signal to pause. Awareness creates space, and in that space, you choose rather than react. That choice is where mastery lives. Most traders live in reaction. Price moves up, they feel excitement. Price moves down, they feel fear. A candle spikes, they feel urgency. Their behavior is tied directly to movement. But when you grow, you detach your behavior from movement and attach it to rules. You do not act because price is moving. You act because your criteria are met. You do not exit because you feel uncomfortable. You exit because your plan says it is time. That shift seems small on the surface, but internally, it is massive because now your emotional state no longer controls your decisions. Your structure does, and structure creates freedom. It sounds strange at first. Rules feel restrictive, limits feel constraining, smaller risk feels slower. But without structure, you are at the mercy of impulse. And impulse is expensive. You have experienced it. That moment when you break your rule just once. That moment when you increase size because it feels right. That moment when you revenge trade because you want the loss back. In those moments, you are not trading the market. You are trading your emotions, and emotions are unpredictable. You begin to see that consistency is not about having perfect setups. It is about having consistent behavior. Even average methods can produce results when executed with discipline. But great methods fail in the hands of inconsistency. The mirror keeps showing you this lesson until you finally accept it. You do not need to be smarter than everyone. You do not need secret knowledge. You do not need to predict the future. You need to control yourself. And controlling yourself does not mean suppressing feelings. It means planning for them. Before the trade begins, you define your risk so clearly that there is nothing left to negotiate. You say to yourself, if this amount is lost, I accept it. And you mean it. Not halfway, not with hesitation. Fully. If you cannot accept it, the position is too large. When the risk is truly acceptable, you stop watching every tick as if it is life or death. You allow fluctuation. You give the trade space. That space is not just for price, it is for your mind. When you reduce size, you increase clarity. When you increase clarity, you reduce emotional noise. And when emotional noise is low, you can hear your discipline clearly. This is where many traders misunderstand growth. They think growth comes from bigger positions, but growth comes from deeper stability. The account grows when your behavior stabilizes. The mind grows when it stops reacting to every outcome. And over time, that stability compounds. There will still be days when you feel frustration. There will still be streaks that test your belief. There will still be trades that stop you out by a small margin before moving in your direction. You will feel the sting. You will feel the urge to adjust something. But instead of reacting immediately, you step back. You ask yourself, was this part of the plan? If yes, you accept it. If no, you refine your behavior. You separate randomness from error. That separation is powerful because without it, you either blame the market or blame yourself unfairly. The market is not personal. It does not know you exist. It is simply a flow of transactions, a constant exchange of participants acting on their beliefs. When you personalize outcomes, you add emotional weight that does not belong. You say, why does this always happen to me? But it does not. It happens to everyone who participates long enough. Drawdowns are not proof of failure. They are proof of participation. And if you have defined your edge properly, drawdowns are temporary. What destroys traders is not the drawdown itself. It is the behavior change during the drawdown. You start questioning everything. You start adjusting rules impulsively. You start taking trades outside your criteria. You start trying to make it back faster. That shift from structure to desperation is what compounds losses. But when you remain anchored to your process, even during uncomfortable periods, something remarkable happens. You build identity, not identity based on wins, identity based on discipline. You begin to see yourself as someone who follows through, someone who executes consistently, someone who manages risk calmly, someone who reviews objectively. That identity strengthens your future decisions. Because now, when temptation appears, you are not just protecting money, you are protecting who you have become. This is deeper than strategy. It is character development. Trading accelerates character exposure. In other areas of life, flaws can hide for years. In trading, they show up quickly. Impatience, overconfidence, fear, greed, avoidance. They surface because money magnifies emotion. And instead of seeing that as a curse, you begin to see it as a gift because it forces growth. When you stop running from uncomfortable truths about yourself, you gain power. You realize that the market cannot make you overtrade. It cannot make you increase size. It cannot make you hold losers. It cannot make you exit early. Those actions come from within. Once you accept that responsibility, you stop blaming conditions. You stop saying it was a bad day. You start asking, did I stay aligned? Alignment becomes your focus. And alignment requires energy. So you learn to protect your mental capital as carefully as your financial capital. You do not sit in front of the screen endlessly. You do not chase movement when your criteria are not present. You conserve focus because fatigue breeds mistakes, and mistakes are often not about knowledge. They are about depletion. When you are tired, you rationalize more easily. When you are stressed, you override rules faster. When you are emotionally drained, discipline weakens. So sustainability becomes part of mastery. You build routines outside the market to stabilize you inside it. Sleep, exercise, quiet reflection, clear boundaries around trading time, not because they sound impressive, but because your nervous system affects your decisions. A regulated mind executes better than an agitated one. And over months and years, this regulated state becomes normal. You no longer feel adrenaline when entering. You no longer feel panic when price fluctuates. You no longer feel euphoria after a win. You feel steady. Calm does not mean indifferent. It means centered. From that center, compounding becomes natural. Not because you force growth, but because you repeat quality behavior. You understand that the goal is not to win big today. It is to execute well today and then do it again tomorrow. And the next day and the next month, you stop measuring yourself by single outcomes. You measure yourself by consistency of execution. That shift removes pressure. When pressure drops, clarity rises. When clarity rises, errors decrease. When errors decrease, the edge expresses itself. And that is when you begin to experience a quiet confidence. Not loud, not boastful, not fragile, quiet because it is built on repetition. You know that losses are possible at any moment. And that knowledge does not scare you. It stabilizes you. You have already accepted the cost before it happens. So when it does not shake your foundation. And when a series of wins arrives, you do not become reckless. You stay measured because you understand that both wins and losses are temporary waves inside a larger ocean. You are no longer chasing the wave. You are managing your position within the ocean. And that perspective changes everything. You stop asking, how much can I make this week? And you start asking, how well did I follow my plan this week? You stop obsessing over profit targets. You focus on process integrity. Because deep down, you know that if the process is solid, the results will follow over time. This is not glamorous. It is not dramatic. It is quiet work, daily repetition, daily review, daily discipline. But in that quiet work, transformation happens. You begin to trust yourself. You begin to feel grounded. You begin to notice that the market no longer triggers you the way it once did. And that is when you realize something profound. The market did not change. You did. You are not calmer because volatility decreased. You are calmer because you accepted volatility. You are not disciplined because conditions are perfect. You are disciplined because you committed to structure regardless of conditions. And that is the final reflection the mirror offers. It shows you the version of yourself that can operate inside uncertainty without losing balance. It shows you who you become when you stop trying to control outcomes and start controlling behavior. Trading is not a test of intelligence. It is a test of alignment between your beliefs and the reality of randomness, alignment between your risk and your tolerance, alignment between your rules and your actions. When that alignment is present, the struggle softens. You still work, you still review, you still refine, but the emotional chaos fades. You no longer need to prove anything to the market. You no longer need every trade to validate you. You participate with humility. You execute with clarity. You accept with grace. And in that steady participation, growth becomes sustainable, not explosive, not dramatic, but real, because the true edge was never just on the chart. It was in the mirror. And when you learn to face that mirror honestly, to refine the person staring back at you, you unlock something far more powerful than prediction. You unlock self-mastery. And once you have that, the market becomes less of a battlefield and more of a training ground, a place where uncertainty sharpens you rather than scares you, a place where discipline defines you rather than emotion, a place where growth is not measured by a single trade, but by the person you become through thousands of them. That is the journey. And when you understand this deeply, trading stops being something you fight. It becomes something that refines you quietly, relentlessly, honestly. And in that honesty, you finally see yourself clearly, not as someone chasing certainty, but as someone who thrives inside probability, not as someone controlled by fear, but as someone guided by structure, not as someone desperate for validation, but as someone grounded in process. That is who you are becoming. And that reflection is worth more than any single winning trade. As you continue on this path, something subtle begins to happen inside you. You start noticing your thoughts before they turn into actions. Before, a losing trade would immediately create a reaction: tight chest, faster breathing, the urge to fix it, the need to recover. Now, there is a pause. That pause is everything. In that pause, you see the emotion forming. You feel it rising. But instead of being pulled by it, you observe it. You realize that the emotion is not a command. It is information. And information can be acknowledged without being obeyed. This is maturity in trading. You are no longer trying to eliminate fear. You are simply refusing to let fear decide. You are no longer trying to suppress excitement. You are simply refusing to let excitement distort your risk. That separation between feeling and action is the space where consistency lives. You begin to understand that your greatest strength as a trader is not prediction. It is emotional regulation. When others panic, you stay measured. When others rush, you wait. When others overextend, you stay within your limits. Not because you are special, but because you trained yourself to value stability over thrill. The thrill is seductive. You remember what it felt like in the beginning. Every trade felt intense. Every move felt dramatic. Every win felt like proof you were on the verge of something big. But thrill is unstable. It creates highs and lows, and trading does not reward emotional highs. It rewards steady execution. When you detach from the need for excitement, the market becomes quieter in your mind. You stop needing constant action. You stop feeling bored when nothing is happening. You begin to understand that no position is also a position. Waiting is not weakness. Waiting is discipline. You do not need to be involved in every movement. You only need to be involved when your edge presents itself. This patience changes your relationship with time. Instead of feeling rushed, you feel deliberate. Instead of fearing missed opportunities, you trust that more will come because they always do. Markets move every day. Opportunities form repeatedly. Patterns of behavior repeat over time. Scarcity is an illusion created by impatience. When you internalize that truth, you stop chasing. And chasing is what drains most traders. Chasing entries, chasing losses, chasing bigger size, chasing fast growth. The moment you stop chasing, you start building. Building consistency, building self-trust, building capital gradually. You realize that trading is not about proving something in a short window. It is about staying in the game long enough for your discipline to express itself. Longevity becomes your goal. If you are still here executing your plan months from now, you are winning. If you are still following your rules during difficult weeks, you are winning because survival plus discipline equals compounding, and compounding is quiet. It does not announce itself loudly. It grows slowly at first, but over time, the curve bends, not because you forced it, but because you remained consistent long enough. That consistency requires humility. Humility to accept that you do not control outcomes. Humility to admit when you break rules. Humility to reduce size when needed. Humility to pause when your mind feels unstable. Humility protects you. Arrogance destroys traders faster than ignorance. Arrogance says, I've figured it out. Arrogance increases risk prematurely. Arrogance ignores warning signs. Arrogance refuses to adapt. Humility says, anything can happen. Humility respects uncertainty. Humility keeps risk contained. Humility stays flexible without abandoning structure. When humility becomes part of your identity, you stop needing to be right. You start needing to be aligned, and alignment creates calm. That calm is not passive. It is focused. You begin to notice how little energy you waste now. You are not constantly analyzing every tick. You are not obsessing over every opinion. You are not switching approaches every week. You have clarity. Clarity reduces noise. Noise is what confuses traders. Too much information, too many opinions, too many impulses. But when your rules are clear and your risk is defined, noise loses influence. You are not easily shaken. Even during drawdowns, you remain stable. Not because drawdowns feel good, they never do, but because you understand that discomfort is temporary. You look at the bigger picture. You evaluate whether your process remains intact. If it does, you continue. If adjustments are needed, you make them calmly, not emotionally. You no longer equate short-term results with long-term capability. That separation frees you. You are free from the pressure of needing immediate proof. You are free from the anxiety of every fluctuation. You are free from the obsession with daily performance. Instead, you focus on the craft. Trading becomes less about outcome and more about execution quality. You ask yourself each day, did I act like the trader I am becoming? Not, how much did I make? That question shifts your internal measurement, because when you act in alignment with your standards, you feel stable regardless of the day's result. Stability builds confidence, and real confidence is not loud. It is quiet assurance rooted in preparation and repetition. You know your plan, you know your risk, you know your limits. That knowledge removes doubt. You may not know what the next trade will do, but you know how you will respond. That predictability in your behavior is what allows you to operate in an unpredictable environment. You cannot predict price, but you can predict yourself, and that is enough. Over time, you start noticing that trading improves other areas of your life. Patience carries over. Emotional awareness carries over. Responsibility carries over. You respond to stress differently. You think before reacting. You accept uncertainty in situations outside the market because you trained yourself to do so here. The mirror did its work. It exposed you. And instead of turning away, you refined what you saw. Now, when you sit in front of the screen, there is less tension, less internal noise, more presence. You are not desperate for the next move. You are not afraid of the next loss. You are simply ready to execute when conditions align. That readiness is powerful. It is steady. It is grounded. It is sustainable. And sustainability is the real achievement. Anyone can have a great week. Anyone can catch a strong move, but few can remain disciplined over years. Few can stay emotionally balanced through cycles. Few can maintain structure when excitement or frustration tries to pull them away. If you can, you separate yourself quietly, not through dramatic gains, but through consistent survival and steady growth. The market will continue to fluctuate. Conditions will change. Volatility will rise and fall. Trends will form and reverse, but your core remains the same. Defined risk, clear rules, objective review, emotional awareness, consistent execution. That foundation does not depend on external conditions. It depends on you. And that is empowering because you realize that your success is not random. It is built on daily choices, choices to follow your plan, choices to reduce size when needed, choices to step away when emotional, choices to review honestly, choices to remain humble. Each choice reinforces your identity. You are no longer someone hoping to win. You are someone committed to process. And when you commit deeply enough, results follow naturally over time. Not perfectly, not without setbacks, but steadily. The longer you stay aligned, the less dramatic trading feels. It becomes part of your routine. You prepare, you execute, you review, you rest. You do not obsess. You do not panic. You do not chase. You participate. Participation with discipline is powerful because while others burn out, you endure. While others overextend, you preserve. While others react emotionally, you stay measured. That difference compounds quietly. And one day, you look back, not at a single trade, not at a single week, but at the person you have become. More patient, more controlled, more self-aware, more resilient. The account reflects that growth. But more importantly, your mindset reflects it. Trading no longer feels like a struggle against the market. It feels like a partnership with probability. You respect uncertainty. You define your risk. You execute consistently. You accept outcomes calmly. That rhythm becomes natural. And in that rhythm, you find something unexpected. Peace. Not because trading is easy, but because you stopped fighting reality. You stopped demanding certainty. You stopped attaching your worth to outcomes. You accepted the mirror and you worked on what it showed you. Now, when a trade wins, you smile lightly. When a trade loses, you remain steady. When a week is strong, you stay humble. When a week is difficult, you stay structured. Nothing shakes your core because your core is built on alignment. Trading is still uncertain. It always will be. But you are no longer uncertain about yourself. You know who you are in the market. You are someone who accepts risk, someone who follows rules, someone who learns from mistakes, someone who values long-term growth over short-term thrill. That identity is powerful, and once it is established, it carries you forward. The mirror continues to reflect you, but now, when you look into it, you do not see fear. You do not see desperation. You do not see chaos. You see discipline. You see humility. You see clarity, and you realize that trading did not just test you. It shaped you. It shaped you into someone who can operate inside uncertainty without losing balance. Someone who understands that probability, not prediction, drives success. Someone who knows that growth is built on repetition, not excitement. Someone who can lose without collapsing and win without losing control. That is who you become when you truly understand that trading is a mirror of who you are. And once you accept that reflection fully, you no longer need to chase anything. You simply show up each day as the disciplined, aligned trader you have built yourself to be. And that, more than any single result, is real mastery.